15 cities in South Florida are unraveling, and the housing market crash is not just a rumor. It is a financial crisis in motion. Behind the sunshine, more than 275,000 people are projected to leave Florida in 2025, pushed out by skyrocketing insurance premiums up to $12,000 a year, plummeting sale prices, and mortgage payments that have doubled since 2021. As inventory piles up and desperate sellers slash prices by as much as $75,000, entire communities are caught in a downward spiral. But which cities are getting hit the hardest? And what is igniting a statewide exodus? The answers reveal far more than just a market correction. Florida's population boom has slammed into reverse. New projections show more than 275,000 people will leave the state in 2025, the sharpest exodus since the 2008 crash. Miami-Dade alone is set to lose over 67,000 residents, while Broward and Palm Beach together are on track to lose more than 33,000. The reasons trace straight to the wallet. Median home prices that soared 60 to 80% during the pandemic are now sliding, down $40,000 to $75,000 from their peaks in cities like Cape Coral and Naples. Statewide, the median price is $412,734, a 4% drop year over year, the steepest decline since 2011. Monthly mortgage payments have doubled in just 3 years. A $350,000 loan that cost $1,475 a month at 3% now runs over $2,300 at 7%. That extra $825 a month is pricing out first-time buyers and draining savings for anyone who bought at the top. For older homeowners on fixed incomes, the hit goes further. Property insurance premiums have exploded, averaging $3,023 a year statewide, a 34% jump in just 1 year. In coastal cities, annual bills routinely top $8,000. And some policies are clocking in at $12,000 or more. For a typical home in Fort Lauderdale, insurance alone can now rival the mortgage. Inventory is flooding the market. Active listings are up 34% year over year, with more than 177,000 homes now for sale, more than double the entire Northeast. In Naples, inventory surged nearly 34%, while new listings are down, showing that homes are just sitting unsold. In Cape Coral, over 12,000 homes are on the market. Forcing sellers to slash prices, offer cash incentives, or pay closing costs just to get buyers in the door. Investor pullback is accelerating the downturn. Institutional purchases have dropped below 6% of sales, down from over 25% just 2 years ago. Rental yields have collapsed in cities like Palm Bay, where average rents fell 12% in a year and vacancy rates are rising. Short-term rental markets have cratered in Punta Gorda and Cape Coral, with properties that fetched $675,000 at the peak now struggling to sell for $500,000. Some investors are cutting prices by $100,000 or more just to exit. Insurance company exits and new flood zone rules are compounding the crisis. 6 major insurers went insolvent in 2022, leaving the state-backed Citizens Property Insurance Corporation as the largest carrier, now with over 800,000 policies. Nearly 89,000 properties in Broward County alone have been added to mandatory flood zones, forcing thousands to buy extra insurance or pay steep assessments. In Miramar and Pembroke Pines, more than 47,000 homes have been hit with new flood insurance bills, often running $1,500 to $3,000 a year on top of everything else. For many, the math no longer works. Carrying costs have hit a tipping point. The state's affordability ranking has plunged to 49th out of 50. With wages lagging far behind housing costs, families are uprooting, retirees are cashing out, and entire communities are bracing for a wave of forced sales and declining values. The question now isn't whether the market is correcting. It's how deep the slide will go in South Florida's hardest-hit cities. Four forces are driving the unraveling of South Florida's housing market, and together, they're rewriting the rules for buyers, sellers, and investors alike. First, the insurance catastrophe. 6 major carriers went under in 2022, leaving hundreds of thousands of homeowners with nowhere to turn but the state-run Citizens Property Insurance Corporation. Premiums have exploded, averaging $3,023 statewide, with coastal policies often running $8,000 to $12,000 a year. In Miami-Dade, some bills now top $15,000. For many, insurance now costs as much as the mortgage itself, and annual increases of 18% are becoming the norm. Next, the affordability squeeze. Wages in South Florida haven't budged, but housing costs have rocketed out of reach. The state's affordability ranking has collapsed to 49th in the nation. Incomes in cities like Cape Coral and Palm Bay can't support monthly payments that routinely clear $2,500 once taxes and insurance are factored in.